Director of Tax here at ICAS, and I hope you're all ready to have a very productive chat about tax. So our event this morning will last about an hour, and we'll have a look at new mandatory agent registration rules, and briefly also at the upcoming multi-factor authentication for agent accounts, and some talk around the sanctionable conduct guidance. So before we begin, just a few housekeeping matters to remind you of. So there will not be a live Q&A at the end of today's session, as there is a lot of information to get through. But if you have any questions, please pop them in the chat. The chat is still available, or email us and we'll get back to you later. We'll put all the details to contact us up at the end of the webinar. So as I said, please join the conversation today through the chat box, which you can access at the top of your screen. This allows you to comment or discuss with your fellow attendees on any matters covered by the webinar. And if you do put any questions in there, as we said, we will get back to you. So we're recording this webinar and we'll make it available for on-demand viewing afterwards in case you want to refer back to it. And the session slides will also be available for our ICAS students and members on icas.com. Everyone on the webinar is automatically muted, so there's no need to be concerned about any background noise. Now on to the main event. I would like to introduce our speaker, Susan Cattell, who is our Head of Tax Technical Policy here at ICAS. Very well-known figure if you've attended any of our webinars in the past. So I will pass on to Susan now. Thank you very much.
Good morning, everybody. As Katie said, I'm Susan Cattell, Head of Tax Technical Policy at ICAS, and welcome to this webinar. And just going to have a very quick look at today's agenda. And obviously, our main topic, which was obviously in the title of the webinar, is mandatory tax advisor registration with HMRC. So it's obviously really important that everybody is aware of what they're going to need to do and that you do it within the relevant time frame. So we'll have a look at how did we get here. I just want to say a few words about the background to this and who needs to register. Obviously, absolutely critical. The conditions for registration, and we're going to say a bit about relevant individuals there as well, and how to register and when, which is obviously very, very important because you do need to make sure you register by your individual deadline. And then we are going to, we'll have a very brief look at suspensions, sanctions and appeals. We're then going to have a brief look at HMRC's new powers for tackling agents who facilitate non-compliance. And just to be clear, I mean, obviously, I'm sure no ICAS members who are obviously bound by PCRT would be in any way contemplating facilitating non-compliance. But I think the important thing to note here is that, in fact, we've actually got a new definition of sanctionable conduct. And some of you may have seen that there have been some concerns raised about this and how HMRC might interpret it. So we're going to have a quick look at that. And then finally, we've got a sort of bonus topic. This wasn't mentioned in the blurb for the webinar, but I really just wanted to highlight to you that multi-factor authentication for agents is coming. HMRC are going to turn it on fairly soon. So I just want to run through 6 steps you can take to prepare, 6 things to think about. So without further ado, let's get into today's topics. So first up, agent registration. And I just want to give you a bit of background on this because I think it's important to understand the context for agent registration and also what it's intended to do and what it isn't intended to do. So some of you will remember, no doubt, that back in 2019, Sir Amyas Morse produced his report on the loan charge. And one of the big recommendations in there was that it was important to raise standards in the tax advice market because many of the people who got embroiled in loan charge schemes had been sort of advised by somewhat rogue tax advisors. So he's sort of flagged this as a major issue. And a bit since 2019, there have been a whole series of consultations and some actions have been taken, for example, to crack down on some unscrupulous repayment agents. And the last sort of big consultation was in 2024, and this actually looked at whether we should regulate the tax advice market, and there were some options for regulation that were on the table. And ICAS has consistently called for the introduction of a requirement for all tax advisors to belong to a professional body And we supported that option in the 2024 consultation. It was one of the options, and so did most of the other big professional bodies who are signed up to PCRT. I'm not going to bother going through the other options, one of which was some kind of independent regulator, because it all became somewhat academic in the autumn budget 2025, because the government said that they are not going to do this. They will not regulate tax advisors. They will work in partnership with the sector to raise standards. So this means that, unfortunately, there is a fairly fundamental problem which is not being addressed, and that is that anybody can set themselves up as a tax advisor. You don't have to take any exams to show that you know anything about tax. You don't have to keep yourself up to date. You don't have to do CPD. The only people who will be doing all those things will be those who are regulated, who do belong to a professional body. And about something like 30% of tax advisors don't belong to a professional body. So I say there's no regulation on them whatsoever. And unfortunately, HMRC has research that shows that the vast majority of the public believe that tax advice is regulated, that it's like, you know, going to a solicitor or something. So there's a big mismatch there. And this is, of course, why some people go to sort of very poor advisors and end up doing things that probably aren't very sensible and can have dire consequences for them. But that's where we are. Now, it's important to note that there was another proposal in the consultation that did get the go-ahead, and that was that all tax practitioners interacting with HMRC should have to register with HMRC, and that is going ahead, and it's going ahead from May 2026. Now, don't be misled by this idea of meeting minimum standards, because it's very important to be clear that this is not regulation. HMRC are not taking on the regulation of tax advisors. They will not be, you know, checking that you've passed your exams. They will not be checking that you're doing your CPD. They're not going to require you to have professional indemnity insurance. This is not regulation. And HMRC are at most emphatic that they are not going to regulate. I was quite amused, actually. They put up some Q&As on Monday this week, and one of the questions was, does registering as a tax advisor mean I am authorised or qualified to give tax advice? To which HMRC's reply is no. Registration is not a form of regulation and does not reflect your competency or authorise you to advise on tax matters. So I just really wanted to make that clear, that this is not regulation. What it is, of course, though, is allowing HMRC to keep track of all the advisors who are interacting with them, and it will make it easier for them to carry out certain sanctions. And that's the other thing we're going to touch on today, because another proposal that it was separate from this consultation, but there was also a separate consultation on expanding HMRC's powers to tackle tax advisors facilitating non-compliance. That came in from April 2026, and it's this new definition of sanctionable conduct that I just want to highlight to you. So let's get on with registration first, because that's today's main topic and where we're going to spend most of our time. So who does need to register? Well, it's called tax advisor registration, and unsurprisingly, it's tax advisors that have to register. But we do have a definition of tax advisor, Section 224 Finance Act 2026. And, oh, sorry, I've not hit the wrong button to move the slide on. Right. A tax advisor is defined as an organisation or sole trader who, in the course of a business carried on by it, assists other persons with their tax affairs. So it's pretty broad. And assisting another person with their tax affairs includes advising them in relation to tax, acting or purporting to act as an agent in respect of tax, providing us, and this one is really broad, providing assistance with any document that is likely to be relied upon by HMRC to determine the other person's tax position. So that's going to catch quite a lot of people, probably beyond what most people would say think of as a tax advisor. And note that a person can be a tax advisor even if they are appointed indirectly. for example, at the request of someone other than a client. So the classic example there might be that you're an accountancy firm, you do provide tax services, but somebody comes along and they need some advice on a specialist area which is not your area of specialism, and what you do is you get another specialist in to advise them, and that person can then be a tax advisor as well. So let's move on to the actual registration requirement, because the way the legislation puts this is the sort of negative, if you like. It says tax advisors must not interact with HMRC if they are not registered or within one of the exceptions from registrations. So it's really important that we have a look at what that actually means. And the definition is that anyone who interacts with HMRC about someone else's tax affairs and is paid to do so must register. And it's the legal entity that interacts with HMRC that must register, not individual employees. Although, as we shall see later, some individuals in the business may well end up being relevant individuals, and they have a role to play in this as well. But just for now, it's the legal entity that interacts that has to register. So if you're operating as a partnership, that's going to be the partnership. And interaction, which is defined in section 223, includes phone, post or email. It also includes if you interact through the gov.uk website, the HMRC app, you send returns, claims or other documents electronically or otherwise. And just in case that wasn't broad enough, it covers communicating with HMRC in any other way. So that's a very broad definition, and it's definitely catching people who did not think of themselves as tax advisors. For example, conveyancers who when they do property transactions may very well file SDLT returns. And it's also important to note that HMRC has said, and this was in the context of conveyancers, but it probably has a wider application, that even if you just make a payment to HMRC on behalf of the client, that will be enough to be an interaction. And the reason that came up was because conveyancers sometimes pay the SDLT, but I say there's no reason to think that that doesn't go beyond conveyancers. So it's a very wide definition. And if you do interact with HMRC, as set out on that screen, it doesn't matter if you don't see yourself as a tax advisor and you don't describe your work as tax advice. And I think, conveyancers are a classic example. I believe many of them actually say, we're not going to give you any tax advice. We are not tax advisors, but that doesn't matter. They're still going to have to register if they tick the boxes that were set out on the previous screen and they interact with HMRC on behalf of clients. It doesn't matter if you're a sole trader. So, you can be a sole practitioner, you're still caught by this. You still have to register. It doesn't matter if helping people with their tax is not the main business function. Again, you're still caught, even if tax is only a small part of what you do. You only interact with HMRC on behalf of one client. Your business is based outside the UK, because obviously plenty of tax advisors based outside the UK may well be interacting with HMRC on behalf of clients. They're also caught. They have to register. So the only let out is if you fall within some of the exceptions, which we need to have a look at, because funnily enough, we've had quite a few queries, particularly about one of these, and I have passed some of them on to HMRC. So let's have a look at what the exceptions from registration are. These are in Schedule 20 of the Finance Act. So first up, we've got some fairly easy ones here, because overseas businesses, so in the case of VAT, non-established taxable persons, they might appoint a VAT representative, and similarly, people overseas businesses might appoint a Northern Ireland tax representative, a UK rep for vaping duty, or an import one-stop shop intermediary, and all of those are accepted from registration, so we don't have to worry about them. There's also an exception from registration for an advisor who interacts in relation to customs duty, import VAT or excise matters. So that's typically your customs agent. Right, now we get on to the more probably interesting exemptions, particularly for the purposes of this call. And quite a lot of ICAS members work in-house in companies. So this exception is quite important because if you think about it, a group tax manager in a group of companies is going to interact with HMRC on behalf of those companies in relation to their tax affairs, maybe filing returns and things. And there is an exception for those people if they're acting in relation to a client who is a group undertaking in relation to the advisor. Now, the reason why there have been some queries about that is that the scope of it is not entirely clear. So does it, for example, cover where that maybe the group tax advisor is dealing with, say, A1 exceptions, A1 applications for expatriate work. Say that again, for employees who are on overseas secondments. And does it also apply because you can have certain joint venture structures where, say, the group tax manager for one of the joint venture companies is doing returns and things on behalf of the joint venture. But unfortunately, that doesn't appear to sit strictly within the statutory wording. So that's an issue that we're waiting for HMRC to give some guidance on, because it seems fairly clear that they shouldn't really be caught. It's not what the legislation is aimed at. But at the moment, it's not clear that they are within the exception. So we're waiting for HMRC to give some opinions on that. In relation to an appeal to a court or a tribunal, so if you only interact with HMRC to represent somebody in an appeal to the tax tribunal or the court, you don't need to register. This one's quite an important one as well. In order to comply with an obligation of the advisor under any enactment, and the two, HMRC have given a few examples of this, which is quite helpful. So the sort of thing this is going to be applicable to is insolvency practitioners, because obviously they're required to act for the insolvent person that they're acting for. It also covers pension schemes, and some investment firms, because again, they're obliged to interact with HMRC about, say, the pension scheme members and doing pension scheme returns, but they don't have to register. In response to a request for information from HMRC, now I'm sure we're all aware that HMRC has extensive third-party information powers. They can get people to supply information to them. So, for example, they get information from banks about people's bank interests. They can ask for information about rents paid to landlords and a vast range of other things. And so if you have to respond to a request for information from HMRC, clearly it would be a bit much if you were then required to register as a tax advisor. So that's what that exemption is for. And there's finally an exception for providers of tax or accounting software, including payroll software. That was perhaps slightly more controversial, given how important tax software is becoming and how important it is that it gives the right answer. So those are the exceptions. One really important thing to note, though, is that if a business provides services that are core, so are within the registration requirement, but it also has other services that would be outside the scope, they still have to register. So it doesn't, and as we said on the earlier screen, it doesn't matter if the tax services are only a small part of what you do, you still have to register. So that's really, really important to note. Providing tax advice services for free. One of the earlier screens talked about providing tax services in the course of business, and there was a specific reference to interacting with HMRC and being paid to do it. And those two things are absolutely critical here, because if you're not being paid and you're not providing services in the course of a business, then you don't have to register. So, for example, an individual might give tax advice to their family or friends. They're not doing it in the course of a business or their professional activities. They're not being paid for it. They don't have to register. And employees or volunteers of charity organisations who give free general advice, again, not acting in the course of a business, they would also not need to register. So let's turn to some specifics now. Check whether you need to register, and critically, check when you need to register. And we're going to talk about the timetable in more detail later, but we've got a couple of articles on the website. The first one's all about who needs to register and when, and the conditions and things. And the second article is about sanctions, suspensions and appeals. And both articles have got links to HMRC's high-level guidance that they've already published. And HMRC has provided an interactive tool to check if and when you need to register. And this is actually quite good. So if you go in, it asks you questions and takes you through what you'll see if you use it. It takes you through some of the things that might give you an exception and so on. So that's really useful to go and have a look at. And it at the end of it, it tells you whether you need to register, and it will give you the date when you need to register. Now, notice, though, that HMRC put a disclaimer at the end of it saying they're not bound by it. But even so, it's quite helpful. Now, we do understand that they will be updating this and amending it, so do keep an eye on it over time. Now, we know also that HMRC is working on more detailed technical guidance, and I've already mentioned that I've submitted various examples to HMRC where people are not clear whether they need to register or not, and we're hoping they're going to be covered in the detailed technical guidance, and it will fill some of these gaps. I know a lot of questions have been raised about relevant individuals as well, which we'll come on to in a moment. So do go and have a look at what's there already, and do look out for the more detailed guidance, particularly if you've got sort of fairly complicated arrangements. So let's have a look at the conditions, because you may remember right back at the beginning that the point of registering is that the advisors have to meet certain minimum standards. Well, these are the conditions you have to meet to register. First up, the business must provide evidence of supervision for anti-money laundering. Now, that's not new. Obviously, you have to do that already. But that's something that's really important here is that if you're not already set up and providing this evidence, when you apply to register with HMRC, you actually have to be able to provide evidence that you are being supervised. It's no good providing evidence that you've made an application to be supervised. That's not good enough. So if you aren't already supervised for money laundering and you're about to have to register with HMRC, perhaps one of the conveyances we were talking about earlier, it's really important to make sure that you have your supervision for anti-money laundering in place, because HMRC will not let you register until that's there. A pending application is not good enough. Now, the business that's registering must not have any relevant outstanding tax returns or unpaid tax unless it's covered by a payment plan. Now, HMRC is giving some guidance on what it means to have outstanding tax returns. And one critical point there is that obviously an annual return, so let's say a self-assessment tax return, that's an annual requirement. So one return, HMRC is going to give a period of grace for you to file, so it won't be quite immediately. You're late when it's 1 day late, if you like. So after the period of grace, your annual tax return is late, that's a problem because you will not meet this condition. But if it's VAT returns, so if the business is late with VAT returns, because most businesses are having to do that 4 times a year, HMRC will actually treat this condition as being failed, where the pattern of non-filing is equivalent to 1 full year of returns remaining outstanding after the grace period. So basically, they're looking at this on a sort of yearly basis for any taxes where the requirement is more frequent than annually. So something similar for pay as you earn, for example. And on unpaid tax, yeah, if there's any problem with paying tax, it's going to become really, really important to make sure you've set up a time to pay arrangement and that you stick to it, because otherwise you will fail that condition, or one of your relevant individuals will fail that condition if they haven't paid their tax. You must not be subject to a decision by HMRC refusing to deal with you. That's one of HMRC, well, it is probably HMRC's most extreme sanction, that they can simply cut you off and say, right, we're not dealing with you anymore, which would make it very difficult for you to do anything for your clients. You must not be subject to an anti-avoidance sanction or a stop notice. So basically, this is all the promoters of tax avoidance rules. And the stop notice would be if HMRC's issued you with a stop notice to say you must not go on promoting a particular avoidance scheme. It's very unlikely that ICAS members should have any issue with either of those because, again, professional conduct in relation to taxation would come into play. So that one's perhaps less of a concern. You must not have any relevant unspent convictions for fraud or tax offences. And there is a list of relevant offences in the legislation and the guidance, but the kind of thing that's covered is fairly obvious. It's things like cheating the public revenue, or taking steps with a view to the fraudulent evasion of tax. And there's a few others, false representations for obtaining benefits and so on. But I say there is a list of those, and you will have to say, that none of that is relevant. You mustn't be formally insolvent, so you mustn't have had an insolvency practitioner appointed to deal with your affairs or the business's affairs, and you must not be suspended or permanently banned from registering with HMRC, and we'll talk a bit about being suspended from registration a bit later on. So those are the conditions, and we need to just check who has to meet them. Well, first up, the business. The business has to meet all of those conditions on the previous slide. So that if you're trading as a partnership, it's the partnership. If you're working as a company, it's the company. But also, some relevant individuals who work for the business must also meet the conditions. But there's a couple of slight tweaks here. If you're a relevant individual, you do not have to provide evidence of AML supervision, because that's obviously something for the business. But if you are a relevant individual, you must also not be disqualified from acting as a director in the UK or some equivalent ban in overseas, because as we mentioned earlier, tax advisors can be based overseas, and so can relevant individuals. And the business will have to provide information about those relevant individuals. So we also need to know who the relevant individuals are for any sort of particular business. And this is something that it's quite important to think about in advance, before you get anywhere near your registration deadline, because clearly you need to make sure that the relevant individuals in your business know that they're relevant individuals, and you obviously will need to make sure that they are meeting all those conditions, as well as the business itself. Now, in order to identify who the relevant individuals are for your business, you need, first of all, to identify who the officers in your business are. Now, what's an officer? Well, this is all in section 226. If you're a company, then an officer is a director, fairly straightforward. If you're an LLP, then it's going to be a member exercising the functions of management. If you're any other kind of corporate body, but not within those two, it's an officer whose functions correspond to those of a director. And now, for lots of people, they'll be operating as a partnership. And for partnerships, an officer is a partner in the partnership. And if you're any other kind of organisation, then it's a person who exercises the functions of management. So that's the first step in identifying your relevant individuals. You need to work out who your officers are. And then there are two categories. First up, we've got smaller businesses with fewer than 6 officers. And a relevant individual is an individual who works for the business and plays a significant role in the making of decisions about how the whole or a substantial part of the tax advisor activities of the organisation are to be managed or organised, or an individual who's got a significant role in the actual managing or organising of a whole or substantial part of those activities. So that's really important. You've got to look at what the individuals in your business do and who's making the decisions, who's controlling significant parts of the tax work you do. And secondly, each officer of the tax advisor who is not within A. And that's really quite important, because let's take the example of a partnership with 5 partners, because we're looking here at the smaller businesses. So you've got 5 partners, and let's say that only 2 of them are tax partners, and only those 2 tax partners actually fall within A, and the other 3 are partners doing other things, business advisory work, for example, in maybe insolvency, something like that. And the point of B is that all of those partners will be relevant individuals, even though several of them have no involvement in the tax affairs of the business at all. That doesn't matter. There's still going to be relevant individuals. Now, you could also have one non-partner who falls within A. Let's say you've got a very senior manager who in fact manages all the tax compliance work of the partnership. So they would fall within A. So you would end up having 6 relevant individuals. So that's really quite important. So that's for the smaller businesses. So let's now just go and have a look at larger ones. So this is businesses with 6 or more officers. Now, I'm not going to read this definition out again. It's exactly the same. It's the individuals who play a significant role in those things. So I'm not going to read the definition again. But there's a slight tweak to the second part of this, because if the business has fewer than 5 officers within A, the business has got to nominate some more officers to ensure that they have a minimum of 5 officers as relevant individuals. And on top of that, if there are also some people who are not officers who fall within A, they will also be relevant individuals. So if you had a business with 7, let's say it was a partnership with 7 partners, and again, let's say only 2 of them are falling within A because they've got substantial involvement in the tax affairs and making decisions about the tax activities of the partnership, then the business has got to nominate another 3 of those 7 partners to be relevant individuals. And again, if there's also somebody who's not a partner who falls within A, they will also be a relevant individual. So quite important to go out there and start identifying your relevant officers and telling them, you know, all about this and checking that they meet the conditions and so on. Now, we know that lots of questions have been raised with HMRC about relevant individuals, and we are expecting more guidance and some examples in HMRC's detailed technical guidance, which should help, because I think also that some people are interpreting this differently to others, so maybe coming up with sort of different numbers of relevant individuals. We do understand that, that HMRC is expecting people to take a reasonable approach, and that hopefully HMRC will take a reasonable approach in response. But I think the detailed guidance is going to be important here to try and clarify things and hopefully get a degree of consistency in the way that people are doing this. So watch that space, I think, for some more guidance. Right. Something to note is that when this comes in, and we're going to look at the time frame in a minute and the deadlines for registering, but basically people are going to have to register in different tranches, and that's going to take us right through to 31st of March 2027. But after we've got there, after that initial period, people will have to notify HMRC if relevant individuals leave the business, a new relevant individual is appointed, an individual's role changes so that they cease to be a relevant individual, or they might become one. And so just bear in mind that going forward, you will have responsibilities to tell HMRC, but that the process for doing that is not clear at the moment. So that's something to look out for again. So now the really critical question, how do you register and when? So, and I can't emphasize enough how important it is to make sure that you apply by the deadline for you, because if you don't, you're at risk of being in the position of interacting with HMRC while unregistered, and you really don't want to be there because there are various penalties associated with that. And you could end up being permanently suspended as well. So let's look at the timetable. The how to do it, it's going to be done through the mechanism of the agent services account. And the new online application system, it did go live on Monday, the 18th of May. I had a look. And we hope that HMRC is going to release a video about this online process, because we know, because we saw their prototype, that they had got a really good video, which is very helpful. And it's also helpful for you know, it might be something you wanted to show relevant individuals, say. Unfortunately, at the moment, they haven't issued it, and we're not now sure whether they're going to or not. But what is there if you go to the registration page, there's a registration page for UK-based agents and another one for overseas people. Now, if you go to the UK page, it does set out very clearly what you need in order to register. So it's things like your government gateway ID, you need your UTR for your firm, you need the postcode linked to the UTR. If it's relevant, you need a company registration number and or a VAT number, but only if they're relevant, obviously. You need your anti-money laundering evidence, as I said earlier, that's critical. And you will need the names and contact details of your relevant individuals. Now, the overseas advisors, the application form for them, their process is a bit more onerous because they've got to scan various documents in addition to the evidence of anti-money laundering. So I'm not going to dwell on that because I'm not sure we've got many overseas advisors on this call, but there is a page specially for overseas tax advisors. So do go and have a look at it if that's you. And registration is going to take place in stages, and advisors will have 3 months from the date they need to register to apply for an ASA through the online application process. And it's really important to note that you get your application in and you can continue to interact with HMRC in the 3 months, the rest of that 3 months period, but also while HMRC are considering your application. So that's quite important to note that you can carry on interacting while you're waiting for HMRC to consider your application. Now, if you've already got an ASA, and I imagine many ICAS members already will have an ASA, you don't need to go and register again. But you will still have to do things like providing the relevant individuals, and you will have to meet all the conditions. So that's why I left that till the last thing on this slide, because I think it's really important to understand that you have still got to do everything. The only thing you don't have to do is just go and complete this new form. And what will happen is that HMRC will contact you through your agent services account to ask for that additional information, which obviously is going to include things like your relevant individuals. So look out for that. And I believe, but I don't think this is set in stone, that they'll probably be contacting people from around August. But as I say, I think be prepared is key there. If you've already got an ASA, be ready for the request when it comes through. So let's have a look. For those of you who don't already have an ASA, well, I've already mentioned HMRC's interactive checking tool, so really worth looking at that. And here are the 4 phases. So those without an ASA and who don't fall into one of the other categories that we're going to look at in a moment, they have 3 months from 18th of May 2026 to apply for an ASA. So these are the people who really need to be getting on top of this now, because they need to get that application in before 18th of August. So really, really important for those people to start looking at this. Those who already have a self-assessment or corporation tax account but don't have an ASA, they've got 3 months from 18th of August to apply for their ASA. And notice that that's the mechanism for registering. So, clearly these people haven't found the need to have an ASA because they're doing other things, but now they will have to register because that's the mechanism for registration. You have to apply for an ASA. Those who only provide third-party payroll services to clients have 3 months from 18th of November 2026 to apply for an ASA. And those carrying out financial services activity, they will have 3 months from 31st of December 2026 to apply. So that takes us up then to 31st of March 2027. And HMRC are expected to provide more guidance on financial services, but if you go and use the checking tool, the question that relates to this in the checking tool says financial services activities are those regulated under the Financial Services and Markets Act 2000, and there's a bit more detail about what counts as financial services, even if you don't need financial conduct authority authorization and so on. So essentially, first for now, go and have a look at the checking tool, because that's quite helpful, but HMRC may provide some more detailed guidance as well. And I say the absolutely critical thing in this is to make sure you work out which window you're in and get your application in on time, because otherwise you are going to be in the position where you might be trying to interact with HMRC and you will not be registered. And that is, of course, the first thing we saw earlier on. You are banned from doing that. And that's where we get to suspension, sanctions, and appeals. And I think that it's quite important to note here that in the first instance, when you apply to be registered, HMRC will not have said that they will not automatically refuse registration, for example, if there's an issue with one of the firm's relevant individuals, if it's due to minor or resolvable issues. What HMRC will do, their first response is going to be to engage with the firm and give them an opportunity to resolve that issue. And firms will have the opportunity to make representations to HMRC. And as we'll see in a moment, there's also an appeal process. Now, there is high-level guidance on gov.uk already about sanctions, suspensions and appeals. And there's an article, I posted an article on the ICAS website, which sets out the core information and includes links to the high-level guidance. But what we don't have is the detailed guidance, which will include a lot about the actual processes. And notice that the high-level guidance does include how you have a right of appeal against HMRC rejecting your registration application, or if they try to suspend your registration. And notice that there's quite an important thing here, that obviously getting your registration suspended could be absolutely disastrous, because you won't be able to use your ASA, you won't be able to interact with HMRC on behalf of clients, and that could obviously have a huge impact on the business. So there is the ability, where you've appealed against a rejection, you can apply for temporary relief, which means that basically the suspension gets held over until the appeal is heard. So you can also ask for statutory review as well if before you go to appeal, or instead of going to appeal. So it's quite important to know that the ability to appeal is there, and might be obviously important. And so go and have a look at the article. The details, as far as we have them, are in there, and there's links to HMRC's high-level guidance. And notice that HMRC will contact advisors before acting, and where possible provide support to comply before applying sanctions, which is quite critical as well. And however, HMRC can start imposing sanctions where you try to interact on behalf of clients when you're unregistered or your registration's been suspended. And that includes financial penalties, which sort of start at about 5,000 for each interaction, and then they increase to 10,000 for each interaction. So this is, serious stuff. And also your details can be published, and probably more seriously, you could ultimately be banned from interacting with HMRC permanently. So really don't want to go there, which is why I was saying earlier, really important to get your registration application in on time. Suspension of registration, I just wanted to have a very quick look at when HMRC can suspend your registration. And the first option is if you don't meet the registration conditions. So this would be you, the business, or maybe one of the relevant individuals is late filing their returns, or any of the other conditions are not met. And that suspension will last until the problems are fixed. But HMRC will try to provide support. And we understand that support, if you've got a CCM, the support is likely to come from your CCM. So you can have a chat with them about what can we do to resolve this issue, to avoid being suspended. If you've not got a CCM, we understand that it's going to be through somebody in HMRC's agent intermediary team. So that's the first thing. You could also have your registration suspended if HMRC considers that your behaviour falls below the standards that might reasonably be expected of a tax advisor in their interactions with HMRC. And that in practice means HMRC standard for agents. That's what HMRC have said. Now, that shouldn't be a big problem for ICAS members because you have to comply with professional conduct in relation to taxation, and HMRC accepts that if you comply with PCRT, you will meet their standard for agents. If you don't, if you do fall into this category, you can be suspended for up to 12 months. So obviously really important, and I think the concern around this has obviously been that this is HMRC considers the behaviour has fallen below the standard, and that's a bit subjective, and there was a lot of concern that HMRC might apply this in a way that was somewhat arbitrary and unfair because it was subjective. And so what's happened is that HMRC got the minister to read a statement into the debate in Parliament. So this is a Hansard statement. And the importance of there being a Hansard statement is that if you ended up arguing about this at a tribunal when you appealed against HMRC deciding to suspend you, if there's some ambiguity in the legislation, then you can refer to a Hansard statement to show what Parliament intended. So what this says is HMRC will suspend a tax advisor only after due process, hence all this stuff about HMRC will come and talk to you about this and try to resolve the problems, including offering opportunities to comply and a chance for the advisor to explain whether there is a good reason why they are unable to do so. And HMRC will not use these powers for minor breaches. So really important to know that that statement is there. And HMRC are reflecting this in the guidance, but they're not, at the moment, they're not specifically saying that there is a Hansard statement. So just to make you aware that there is. Right, we're now going to have a very quick look at HMRC's new powers for tackling agents facilitating non-compliance. And the critical thing here is some of you might well be aware that for some time, but in fact since Finance Act 2012, HMRC has had a regime for dealing with dishonest conduct by tax advisors, but that regime hasn't been much used. I think HMRC found it quite difficult to use it against people because, of course, you had to demonstrate dishonest conduct. So what's happening from 1st of April 2026, we have a new regime where or rather an expansion, if you like, of the other regime and a change in the definition of the conduct that's affected, and the penalties have been increased. So where HMRC has reasonable grounds to suspect that a tax advisor has engaged in sanctionable conduct, first up, it can issue a file access notice so that it can obtain papers from the advisor to determine whether there has been sanctionable conduct. So it can have a look at what advisors have been saying to their clients, what's on their files. And if you don't comply with that notice or you provide inaccurate information, they can apply some penalties. And then if, having looked at the papers, HMRC finds that sanctionable conduct has occurred, it can issue a conduct notice and impose a penalty. And the penalty will be linked to the potential lost revenue. And obviously, when this was out for consultation, everybody, or a lot of people, including ICAS, were saying, actually, it shouldn't really be linked to potential lost revenue because that's going to cause problems. It may deter advisors from giving some people advice at all. But that's where we are. That's how it's done. And there's a minimum penalty of 7,500 up to a maximum of 1 million for the first penalty, if there's sufficiently large amount of tax at stake. And after the first penalty, for the second to the fifth penalties, the maximum increases to 5 million. And if you get to the sixth penalty or even more, then there's no maximum. So really quite draconian powers. And HMRC's guidance on this, yes, and also, sorry, I should have mentioned, your details can be published if you're subject to a penalty of more than 7,500. And the guidance is in HMRC's compliance handbook. And the reason I wanted to mention this is, as I said earlier, ICAS members are not going to be out there encouraging people to be non-compliant, obviously. But the problem is with this definition of sanctionable conduct, which, as you've already noticed, is fairly subjective. It's HMRC considering that there's sanctionable conduct. And sanctionable conduct is where the tax advisor does something or omits to do something in the course of acting as a tax advisor. And in doing that, they do it with an intention of bringing about a loss of tax revenue. And a loss of tax revenue is paying less tax than is legally due, paying tax later than is legally required, claiming more tax relief than you're entitled to, and obtaining tax relief earlier than you're entitled to. So that's quite a broad definition. And HMRC's manual gives some examples to illustrate its view, and the compliance handbook reference is at the top of the slide. And I've not put any of the examples on the slide because we did have some discussions with HMRC about a draft, and they did remove one of the examples and they tweaked some of the others, but some issues have been raised with the ones they have published, so it's possible that this guidance could be tweaked. And I did specifically want to mention one example, which is a tax advisor who has a client who is not providing the information that the advisor needs to file the tax return. And so what the advisor does is says to the client, well, if you haven't provided me with the information by this date, then your return will be filed late. And here are the consequences of doing that. Now, you'll be pleased. And what happens is the client sends the information in March, I think it is. The advisor then files, but obviously it's a self-assessment return, should have been filed much earlier than that. And you'll be pleased to hear that HMRC says they don't think that would be sanctionable conduct. But I think it does leave open some sort of questions as to would they think it was sanctionable conduct if the advisor hadn't set a timetable for getting the information and told the client, what the consequences would be of filing late. And the other question which has come up is that, of course, it might be the case that returns are filed late, clients don't supply the information in time, and so on. But the advisor might well tell them to pay the tax, because the actual loss of tax is paying tax later than is due. And just the fact that you filed the return late doesn't necessarily, and particularly in the case of a self-assessment return, mean that you've paid the tax late, because you might pay the tax by the deadline anyway. So there are a few questions about this which have been raised with HMRC. But I think what I would say is that it's worth having a look at HMRC's examples and thinking potentially about reviewing processes. And the reason I'm saying that is because we've got another Hansard statement here, because a lot of concerns were raised about, again, HMRC using this in an arbitrary way, and people were particularly worried that HMRC thought that something had been done with the intention of bringing about a loss of tax revenue, when in fact what had happened was that the advisor had simply made a mistake, or that the advisor thought that HMRC's position wasn't right, that there was another view of the law. And so, again, we've got another Hansard statement from the Minister in the parliamentary debate saying that the powers will not affect advisors who act in good faith or who take a credible view as to what the law requires of their clients, including where they use extra statutory concessions or HMRC guidance to form that view. They also do not affect advisors who make mistakes while trying, as the vast majority do, to do the right thing. So I think the question, and I'm sure you've all got processes in place for documenting advice you've given, and what evidence to support the advice you've given. But it might just be worth going and having a look at some of HMRC's examples and considering whether some of that internal guidance needs to be tweaked, tightened up, whatever. So just something to think about and have a look at. Right, we're now on to our final topic. This was today's bonus topic. I really wanted to say something about this because this is multi-factor authentication for agents. HMRC is introducing this soon. And I've said soon because we don't have a definite date yet. But at one point they were talking about the beginning of June, and the professional bodies have sort of pushed back on that and said that's too soon, given the preparations people will need to make. So at the moment, I think it could be as early as late June, shall we say. So the really important thing to do is to think about what you can do to prepare now, because some of you may remember that HMRC tried to bring multi-factor authentication in for agents a few years ago, and it caused such chaos that they had to drop it. Now, that's not going to happen this time. This is going to go ahead. And the reason for that is because some of you may know that last year there were some really coordinated attacks on agent accounts, lots of scam emails going out and trying to get agents' credentials, and some agents' accounts did get hacked. So the reason for doing this is to protect agent accounts and protect their clients. And really, you really don't want your agent accounts to be hacked, because it causes all sorts of trouble, because then HMRC has to suspend your account. You've got to check whether the bad actors did anything, change bank details and all sorts of things. So that's why this is happening. And you need to think about preparing now before it happens. There's an article on the ICAS website which summarises 6 steps you can take, and HMRC has provided information on those 6 steps in its Tax Agent's Handbook. If you've never looked at the Tax Agent's Handbook, well, now would be a really good time to start. There's some good information in there, including this. If you go to the Tax Agent's Handbook, and there is a link from the article on the website, you will find it in the section on online access to HMRC services. Right, and so I just want to very quickly recap the 6 steps to think about. Set up individual accounts for each member of staff. HMRC recommends that each individual user of your account has their own sign-in credentials. So that's what that's about. And I'd say there are more details from HMRC in the Tax Agent's Handbook. Set up 2 administrators, because what can happen is that if one of your administrators is out, you might have a problem if you need to change your MFA settings. And also, you don't want to have to keep going to HMRC if you've got routine access issues, so and one of your administrators is not around. So set up at least 2 administrators. Make sure that you remove access where somebody no longer needs it. So the obvious example is if somebody's left your firm, make sure you've removed their access. But if somebody no longer needs access for other reasons, perhaps they're no longer doing that particular type of work, then make sure you take their access away. Really, really important, consider how access codes will be received, because I think one of the problems last time round was that codes were going to a phone, and that was not very... Some practices just couldn't work with that. If you've got several officers, hundreds of staff, that's a problem. And if you go and look at the information, HMRC's sort of suggesting using authenticator apps, which get round a lot of the problems and do allow multiple staff access across different offices if necessary. They do suggest that you might want to consider having a backup method of receiving codes, but the critical thing is to go and have a look at the options and start preparing now. And something else that's absolutely critical is go and have a look and check your existing MFA settings, because it's just possible that somebody in the past in your firm, and they may now have left your firm, may have set up some kind of MFA when they were accessing a particular HMRC service. And if that's lurking in the system, that's where the code will go when this comes in. So you need to go and check that and update it. And if you're going to not use phone codes or something, you need to look at setting up authentication. And critically, you do need to tell your staff what you're doing, so that this doesn't come as a big surprise to everybody, and everybody knows how your firm is going to do it. And some firms actually use third-party software to manage the sign-in process. And if you do, then you just need to make sure that any necessary updates have taken place. Now, HMRC has told the software providers that this is coming, so they should be ready, but it's obviously just worth checking if that's something you do. And I should stress that there is supposed to be support when this goes live, and the HMRC's online services help desk should be able to help. And I certainly would recommend as well, if you go and try and do those steps now, and for example, you're having a problem, you can't work out how to change your MFA settings, then it now might be the time to ask the online services help desk, because obviously when this goes live, they may get a lot of people contacting them. So I would definitely go and have a look at this now and start thinking about it. And HMRC, some of you may already know about this, because HMRC has been putting pop-ups on accounts when you log in. And I think maybe somebody's just put something in the chat about seeing that, which is good. If you've already seen it, brilliant. So this is just a reminder, please don't leave it till the last minute. Please do go and have a look. Okay, what next? Well, thank you very much for attending today's webinar. I hope you found it was useful. And there's a few possible actions that you could think about taking, depending on how far along the line you are already. Tax advisor registration, have a look at the ICAS articles and the HMRC guidance. Check HMRC's interactive agent registration tool. Have a think about when you need to register if you've not already got an ASA. If you have already got an ASA, think about meeting the conditions, think about your relevant individuals, and make sure they know, talk to them about it. And then have a look at sanctionable conduct. Have a look at HMRC's examples, what they think about. Have a think about that Hansard statement and how you might evidence things. Let's hope you never get into that kind of dispute, but have a think about your processes. Does anything need tweaking? And multi-factor authentication, please do go and have a look at the 6 steps, and please consider what you're going to do, and make sure you tell people what you're going to do before it hits you. And finally, do send us your feedback. Also happy to get queries, although can I just say, firstly, it's worth going and having a look at all the guidance first. But if you find gaps in the guidance, particularly on registration, do drop me an email, because I've already raised quite a few things with HMRC. We are hoping they're going to cover it in the detailed guidance. I would say on multi-factor authentication, please bear in mind that we can't see all your agents' accounts. So I certainly couldn't tell you how to go and change your MFA settings, but I do know that the online services help desk can, because I'm aware that somebody's asked. So I do give it some thought. Do think about it. Do send us your feedback. And any questions, but as I say, as far as MFA is concerned, think about contacting the online services help desk at HMRC, because they might be more likely to be able to help on that one. Thank you for attending. Hope you found it useful, and I'll see you at the next webinar. I'll now hand over to Katie to wrap up.
Yes, thank you, Susan, so much for that webinar. I hope everybody found it really informative. I know that I did. I saw that there was a bit of chat in the chat box just at the end there. So as Susan said, if you do have any questions, it might not be us who can help you, but if you want to email us at tax@icas.com, we will certainly point you in the right direction. There was a poll that should have popped up on your screen as well, so if you can leave us some feedback, that would be great. And you can see now on your screens our events that are coming up, some really interesting ones. I want to also highlight that we have on the 16th of June, the ICAS Practice Conference in Glasgow. So if you haven't signed up for that already, please do. It will be a great day. And that is pretty much all from us. Thank you so much for attending, and hope you all have a great day.